What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Marathon Digital stock, ticker symbol MARA, on a variety of time frames in anticipation of the next trading day, Tuesday, February 20th. Do not forget, guys, the market is closed on Monday in observance of Washington's birthday, President's Day. So we have a long weekend of stock chart analysis here on the Roensch Capital Charts channel. This is a brand new channel. If you haven't yet subscribed, I appreciate you doing so. Let's jump into Marathon Digital here by starting on the 1 minute chart. Let's take a look to see if there was any intraday opportunity here on ticker MARA to try to generate some scalping revenue around a core position. Now, I was watching this name intraday here today to see if there was any opportunity to kind of beef up, like I said, generate some revenue around what would typically be a core position here. And I was watching and I was looking at these little pull-ins here as a potential breathe and go setup. The breathe and go is a setup that I developed. I'm not claiming to be the first one to ever trade this way by any means. But you know, it's one that I developed for my playbook on my own with particular criteria. It's in the right market environment, it's a highly reliable trade, at least that has edge over a big enough sample size. And it's one of those trades where you can pull it out of your playbook in the correct market environment, and you can kind of rely on it. You know, it can be a backbone, it keeps you busy, and it's the reliable money, you know, that can make your month if the market's right for it. So I was watching Marathon Digital basically, you know, for most of the day. I'm always watching many tickers. The problem was this name, you know, in order for that setup, and really most setups, with the exception of a few, you know, for example, the repeat offender setup is a setup that is really, for the past couple of years, has been like the backbone of my trading. Doesn't necessarily require this as much, but most setups absolutely require a stock to be, you know, what many traders would say is in play. A lot of setups, if you're just trading chop, like on Apple on a day where there's no news and there's no elevated relative volume and there's really no catalyst, okay, it's just a normal day for Apple, you're going to have trouble finding edge. You know, that's just the truth. So Marathon Digital here today, you know, while we're looking at the bigger picture here, intraday for revenue, you know, really predictable edge, revenue generating opportunity, not a lot here, so let's move on here. Let's take a look at the 5 minute and start getting contextual from a day-to-day perspective. So you guys know, if you've watched the channel here before, what are we looking for here on the 5 minute? We're looking for obvious moves that correlate with obvious shifts in volume. Because what does that tell us if we get that? It tells us, hey, a big portion of, or a big sample size of the market more so, agrees with this sentiment more than the other sentiment. Right? Even given an equal move in both directions, it's really an interesting phenomenon if you really, you know, consider what's going on under the hood. Now we look here, of course, off the open, you're going to get big volume. Okay, we actually held decent volume off the open on these two, you know, green candles. You get a bigger fade with similar but slightly elevated volume. However, the bounce candle is very similar, high volume. Okay, this is a scratch in my eyes. We start looking at this green move to the upside compared to this fade that we got. Now, granted, the fade was a little more in the midday. You can expect a lower volume, but maybe not so much to this degree. Okay, you see higher green volume. You know, for me, I'm looking at this 5 minute and I'm saying, you know, it's essentially a net neutral, if not maybe a slight bullish lean as far as sample size bias, but, you know, nothing incredibly definitive here. So let's now get really contextual by looking at the self-fulfilling prophecy levels, starting here with the 30 minute. What are we looking for? Well, we're looking for the most popular indicators, the ones that everybody is watching, the 200 period, that gray line, and the 50 period, that white line. Notice here that we have a tightening channel being formed by both of those. So here's what I'm really looking for Tuesday, okay, from a bullish perspective, okay. Ideally, I want to see that not only the 200 period hold really hard, but I want to see the 50 period break upside. I mean, really, that would put the stock, you know, maybe above 28 bucks a share. Reclaim that 50 period as support. That would be ideal from a bullish perspective. Now, if I'm a bear, not only would I want to see a rejection, a hard rejection off of that 50 period given a test, that white line, Ideally, though, what I really have my eyes on if I'm a bear is a downside break of the 200 period, really. Because you see here, where you have this kind of bottom here, right around like 2670, that region that we've seen the past couple of trading days, that would also break that. I think that would encourage some bears. So that's what I'd be looking for if I were a bear on this name right now. All right, let's move on now to the 4 hour. You can see here that the 50 period and the 200 period are not immediately relevant. The 50 period is about 13.4% away to the downside. The 200 period is about 18.4% to the downside. So I'm not necessarily considering those immediately, given that this video is primarily focused on Tuesday. But I am still watching the 4 hour chart for this reason. If I'm a bull, I want to see really that 50 period, that white line, move upside as much as possible day to day. You know, like I pretty consistently say, get some feet up underneath this recent big move we've seen in Marathon Digital stock. If I'm a bear, really I want to see that hold downside, the 50 period, right? As long as possible. Keep that distance between the stock price and the moving average, that gap, as large as possible, as long as possible, okay? Now, let's take a look at the most important chart, arguably. That's going to be the daily. Everyone's watching this, and you can see here that the 200 days down at 1380, the 50 days down at 21, okay? Not immediately relevant. Again, similar. I want to see this grind upside if I'm a bull, similar to the 4 hour chart, but it's going to take its time even more so on the daily. But really on the daily, I'm looking at psychological levels. What am I looking at? Okay, if I'm a bull, I have two things in mind. Upon downside move, hold 25 bucks a share, please. Right, ideally hold that as a support level. But really, if I'm a bull, I mean, listen, it's not, I know it's a little bit of a move away, but it's not crazy to start talking about 30 bucks a share at all. Not even a little bit. I mean, we were there recently. Ideally, I'd want to see Marathon Digital crack back above 30. If I'm a bear, reject off 30, given a test, ideally. But bears, really, they're looking for a downside break of 20, not only 26, which we've seen as a bottom here recently, but also 25 bucks a share. That psychological level is going to be what the bears are looking for here. Now, let's take a quick look here at the bias in the options chain from options traders here on Friday. 452,000 total contracts. That's going to be a good sample size. It's going to give us some pretty good, reliable data here. See, we have 319,000 of those were calls. 132,000 of those were puts. So we are getting some pretty heavy call side bias on the overall ratio. Now what we can do is we can actually break this down into more relevant time frames. So like the really short term, how do we know, right? Well, the out of the money, the 0 to 20 delta contracts are typically going to be those much shorter dated contracts, and we have volume profiles on that. 70,000 calls, 49,000 puts, bullish lean in the very, very short term. And then you go down here all the way through every delta range, right? So the lower you go, you get to at the money here in the middle, and then deeper in the money at the bottom there. All of them are leaning bullish along with the overall ratio. You know, listen, the option traders can be wrong. As always, make sure your risk is managed. Very important. Stay in the game. But that's what the data here is telling us in the chain on today, Friday. Listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.